How you guys doing today? Welcome back. Today is January 17, 2022. Happy Martin Luther King Jr. Day to you. I would suggest, hope, and implore you take at least 5-10 minutes today. Reflect on why we have today off or why today's a holiday in the first place. I live right outside Atlanta. I teach at Atlanta. Big day for everyone down here. Again, take some time to reflect on that. For me, I would appreciate that. Happy Monday to you. Markets were closed, so not much action to talk about. We do have some great stocks to get into. Firstly, let's get this out the way. My course is available, 25 parts on YouTube. Just go to my channel page. You really can't miss it. It's there for you. I suggest you start there, and then you can watch my show with a lot more clarity. That'd be a good thing for you. Otherwise, stick around. We have some good stuff for you. Secondly, I'm only doing this once, and then I'm not going to do it again for a while, if ever. I have the Discord trial. Check that out. I'm also offering the first 25 people to join 25% off. That's the big go for it. So if it's in the description box down below, it's the top comment that's pinned. Go check it out. And again, 25% off. I have like 10, 11 spots left. If you want to take advantage, start 2022 off the right way. Go check it out. I'd appreciate it. Again, if you don't want to, it's fine. You want to just stick on here at YouTube with me? That's quite all right. I got you. With that being said, I have 7,500 followers and subscribers. I can compete with the larger ones with the algorithms the way they are. So, in return for this episode, all I ask from you is one, your credit card information and your blood type. No, all I ask for is a like, a subscribe, and a comment. I'll give you 5 seconds to do those 3 things. Like, subscribe, and comment. Let's have some weird eye contact to encourage you to scroll down off my face. Let's do it.
Prolonged eye contact. Prolonged eye contact. Prolonged eye contact. Prolonged eye contact.
There you go. So I hope you guys take advantage of that. Love it. Otherwise, I don't want to talk for too long. 8 great stocks to talk about today. 8 great value purchases, all in consolidation or bullish momentum that I really enjoy. Let's get right into it. I appreciate y'all's support. It's me. It's your boy, John Stonkton.
Pulls up 3-pointer. Bang! Bang!
Chef Boyar Swing.
Hey, Mambo. Mambo Italia.
And of course, Bruce Springsteen. Let's get into it. So first is CIDM Syngym. I can spell. It's a really good looking consolidation play, really good looking penny stock off of support. You can see clearly this area has been strong for a resistance and then turned into a gorgeous support play right here. Even with that, a nice little wedge down. Look at it. 1, 2, 3, 4, 5 great hits. Amazing resistance trend line, all coming to a head right at this support. The POC is the highest volume node. It's gravitational. We could easily see a move to that about 20%. And we're risking about what, 4 or 5 here at most. 5% would be bold here, maybe 6. I would risk a little bit less than that, but again, with risk versus reward in mind, just to stay in channel here, if it doesn't break out, it's still about 8 or 9% move, risking 4 or 5. Not bad. So we do want to break out eventually, but right here, great value. The volume profile lines where it always reverses at. Value down here, it could see lower lows, it could keep going, but right here, I want to watch list it and see what it does. It's a great value for a penny stock. Let's check the indicators together. What's so cool about this channel, besides me, nerd, is that I actually don't use indicators to scan with or chart with. As you get better with technical analysis, you're going to find out that the indicators show you 4 things. We call it the MTV system: momentum, trend, volume, and volatility. That's it. That's all they show you. These can help you enter a stock, help you exit a stock, help you plan a trade and then trade that plan, and help you goal set, all these kinds of things. But the TA is the cake, and then the indicators is just the icing. So again, if you're brand new, you'll see what I see live, go through it, but again, do not rely heavily on indicators. If you trade only off indicators, you're gonna have a bad time eventually. Learn some TA, and daddy's got you. Let's check it out. So first is the 10 email line, that's blue, 50 is purple, 200 is red. We can see the 50 is your real nice go signal, right? Once you break over that 50 EMA line, you usually have a pretty good time, right? You have a lot of good day trading opportunities over the blue though. So if we do cross the 10 tomorrow, 2% you cross that, sure, you get really good 4, 5, 6% moves, right? Even here, it wants to click for me. good 4% move. So you want to wait for that crossover? Fine. For a longer term hold, that 50 also makes sense. Would I wait for either? No, I would probably buy into value. The reason I say that, and the reason I bring that up, the word value, you can usually, for a beginner, buy stocks off two things. Value, momentum. Value is when the price goes down low enough and you see it, it's like, oh, it's a good price. That's value. That's like 8/10 of the play that I usually call. The other 2/10 or 1/5, if you want to be like a math nerd and do the denominators or whatever, is momentum. That's when you cross the 50 EMA line, the 10 EMA line. Also fine, but for this play in particular, it's a good value purchase. I'll show you why. The TA shows it, we already identified that, but the RSI is at 41. It reverses plenty down here all the time. Stochastic is low, which is what you want to see. Below -4 is a good value, and then the bulls are low, bears are high. So bulls are oversold, bears are overbought. CIDM for a penny stock is a great one to watch in this week. I think it's really on sale. It's a great value. Overall, if you don't have a lot of money, it's probably one that you can kind of, go into and maybe you get lucky and make a bunch of money. I would just, of course, use risk management and your own due diligence. But overall, CIDM, I love what I see. I would definitely watch list it. Next is CWH. Camping World, for all the people who like nature. Gross. It smells like, fleas. Ew. We can see a nice consolidation once again. Great uptrend that broke down. But now we have a really nice support here. And again, we do have consistent higher lows. I mean, you have 33, and then you have 34, and then you have close to 35.80. Then now you have around 36 here, right? It keeps having higher lows. It's showing some life, so this may be one to buy into momentum with. But we can see we're starting to pressure this resistance downtrend here. We break out of that, we should be good to go. Would I want to buy at 36 instead of 37? Absolutely. But I mean, I can't make it go back in time. Look how quick the reversals are as well. This is what, 2 days, 4 days. What's this? A day, 3 days. What's this? 4 days. You can see how quick this bad boy reverses. Will we possibly see a pullback then take off? Most certainly, that's a possibility. But right here, you may have to buy the momentum. You may see 36 again, but I think we may be going up quicker than we come back down. I love what I see. Let's check the indicators together. This is what I mean by momentum. The 10 EMA line's right here, right? You can give up 1%, and if it holds, then you can go long and play over the 10 EMA line. Let's double check that the 10 EMA line crosses are valid. You cross the 10, great run up. You cross the 10, great run up. Cross the 10 over here, great run up. So again, if you want to wait tomorrow or this week for it to cross the 10 EMA line, it's a great play, great patience, great due diligence. Because at that point, you can use this candle or the slides or stop loss and still mitigate risk. I would wait for that crossover, but we do have value. We still have value because, again, the RSI is low, stochastic is low. I don't really see a bullish divergence. It's there, but you can't really cut through price action like that. But you can see that's lower lows, higher lows. We have a bullish divergence, and bulls are low, bears are high. Sure, we're maybe like 1%, 2% away from a fantastic technical analysis value, which outweighs the indicators. But the indicators do show us we have a value, and that 10 EMA cross, we wait for that to cross over, we should be good to go to buy momentum, and then use that 10 EMA spot in that candle as a stop loss. Looks good to me. CWH, I watch this dip. I do love what I see. Next is RRR, Red Rock Resorts. Since COVID, been on an absolute tear here, doing its thing beautifully. Great trend line here. 1 hit, 2 hit, and now again 3 hits. I point that out because most good trends have more than 3 hits. Any one of you idiots, any one of me idiots, can draw a trend from A to B like this. But A, B, C, D, E, F, G is much more consistent. So don't put too much emphasis in the trend compared to the support line. I think if we have an EMA line supporting us, I would change my tune and we'll see. But that support is much stronger than this trend line, right? We have 1 hit, a nice breakthrough, then 2, 3, 4, 5, 6. Anywhere under 47 and 46 bucks are great value. So if you don't trust the trend, we're coming down 3 or 4% easily. If you do, you have probably the best value here. And maybe the indicators can show us some more light on this. I think you have either the support play or the trend play. What do we have? The 200 shows value. That's gorgeous. So here's what I'm going to do myself personally. If we cross the 200, you can play off that trend line. Go off the 200 and cross, you're good. You cross the 10 as well. Play off of that. Otherwise, I want to wait till 46 or towards 46.50. So I mean, if you want to buy here, you can. But I think waiting for that extra percent and that extra show of hey, we actually have a reversal on this trend line wait for that. So again, buy into momentum over the 200 or the 10. It's your trade, you choose. Or wait for 46 or 46.50. RSI, it's fair. Stochastic, it's fair. Bulls and bears are both tied here, showing we do have a potential a dip here. We're not at the pinnacle bottom of the indicators, and we have the 200 right here. So again, I'd definitely wait for a 200 cross myself, or wait for a bit more value. Overall though, I'd watch list it. I love what I see. It should be a fantastic play into this week either way. Next is SCHH Schwab Trust REIT ETF. There's no price target. It's an ETF based off REITs. But look at this channel up though. Absolutely stellar. 1 great hit, 2 great hits, 3 great hits. So again, you can trust this trend line. Look at old resistance. Look at the consolidation. Breakdown. Look at this consolidation. Breakdown. Consolidation. Breakdown. Consolidation. Let's see a very strong support and resistance. So again, we're risking here 1, maybe 2%. And if it doesn't live, you can see easily 5, 6, 7, 8%. Look at this one. Look at that. We have a gap right here. All right, there's a gap. Gentlemen, come close. Gaps like to be filled. So what we're looking at here is that we may come down to 49 and then reverse. So make sure your stop loss, in my opinion, has to be more than that gap by just a bit. So about 2% risk to see volume is 3 to 1, 3 and some change to 1. Great trend up, great support. If REITs keep printing, this bad boy is going to keep printing. Let's check the indicators together. Ooh, that 200. Look how the 200 has been a support this whole time. And look at over here. Being a support. Can you wait for a 10 cross? Sure. A 50 cross, a bit too far away from my liking, myself. But a 200 support and a 10 cross. So you got value, a little bit lower, and you got a cross. You can play value or momentum. It's up to you. We have a 38 RSI. That's good. Negative 41 is really good as well. Bulls are low, bears are higher. So we could see a bit more of a value. It could probably hit that POC. It could come down maybe a % or 2 to fill that gap to be at a best value. Or you can wait for that 10 EMA line crossover. Either way, you can go both ways, manage risk. Overall, for a beginner trade, it makes a lot of sense. I do love what I see. SCHH, I'm good at talking. I've watched this, it looks good. Next is SELB, SELB. Again, a very simple support play. We do have a resistance trend, which means it's a descending triangle. Descending triangles have more history of breaking down than up. So if I had previous price action that like it built up a lot and then it kind of started making this, I'd be worried. But seeing as that SELB has never really had, lower lows or higher lows, it's just been in this area the whole time, I'm not as concerned. Again, I'm watching risk management. Easily can risk at most here 4 or 5% if it breaks down, and a full move. Right here, the resistance is 21. A good move is 32. A full move breakout's 44. So the risk is mitigated. The reward is huge. I do want to mention how long the reversals usually take down here. It started making the cup and handle here. Took 24 days. Let's just say it comes up, comes down. Let's just go with this right here, this little area. 32 days right here before a really nice reversal. 20 days. We've been here about 8. So definitely this week it may not do anything. It may fake you out. It could take off. Who knows? But historically, this bad boy has taken some time to really gain speed. I'm not going to rush in here at all. Let's check the indicators. A 10 crosses right there. Look at that. Look at that right there. Do 10 crosses historically do well? Yeah, it has pretty good day trading opportunities. But again, the 10 crosses can be pretty bad if it's under the 50 EMA line. See that how it's below the 50? Doesn't really do much. So again, while we're below the 50, could you day trade off the 10 cross? Sure. Am I putting a lot of emphasis into it? Not really, but again, I'd wait for that at least to go long or wait for a better value at 260. I think it's too much risk here. Let it come down or go back up a bit. 38 RSI, that's pretty good. Obvious bullish divergence. Lower lows, higher low. So that's a nice bullish divergence, great sign. And then bears are really high up there and they're getting tired. Bulls are pretty low. I think SELB can fluctuate here 6, 7, 10% at will. And so for a beginner, I'd be very nervous throwing a lot of money at this when I have a play like the next one I'm about to talk about. Other plays are much easier to read, much less risk, but also less reward. So again, take the good with the bad. In my opinion, SELB is a fantastic play, but for a beginner, I would probably try something else and be less risk, have less risk on the table and less reward in return for some more consistency, like this play that's next. STAG is a gorgeous channel up. Absolute unit of a move. You had 1, 2, 3, 4, 5, now 6 hits, and it's been very consistent. You can consider this a resistance area that's holding off of. I'm not. I'm going to say a little bit lower because it's much more consistent down here. But overall, we have a gap right here that may get filled, and if possible, it's going to come down and then take off. It filled this gap beautifully, right? But it's a gorgeous, absolutely gorgeous channel up. Great support area. Right here, you probably risk easily maybe, again, 2.5% at most. A full move here could be easily closer to 10, 11%. A good 4-to-1, 5-to-1 odds. I like this play a lot because the risk is very clear. The reward's very clear. The options are clear. It breaks down and breaks down past this gap. You can sell, buy back towards 42, or again, if it breaks the trend, just move on overall. You bought in because of the trend. If we lose that, just move on. But right here, it looks really good. I want to check the indicators, especially the EMA lines together. Right here, you can't really play a crossover. If it does kind of consolidate here for a day or two, the 10 becomes playable. Otherwise, you don't want to wait 2% for a crossover when you're getting 10% that's 1/5 of what you want in the first place. So again, EMA lines are pretty worthless. They're pointed upwards. That's good, right? So I mean, if we do consolidate 2 or 3 days, you could probably play a 200 cross or a 10 cross. But right here, I'd buy into value. It's clear we have value because R starts at 37, low. Stochastics at -65. Bulls are low, bears are high. So this is a great value purchase in a bullish momentum setup. I love it. I think if you were a beginner, this kind of play makes a whole lot more sense than maybe like, let's say a SELB or like an AMC or GM that's more emotional and hard to hold on to. This one's a great play. STAG, I'd watch this. I love what I see. Next is ULTA, my fiance's favorite place in the world. Send me money. So ULTA is a gorgeous trend up. We played off it before over here right before earnings, around like 11%. That was dank. And now we're starting to get volatile. The reason is this is where 70% of volume happens. And now they're kind of getting beyond that. We're starting to get more sporadic moves up here. But look at the support at 362, 363. Anywhere in this area is rock solid, even toward 355. Rock solid area. We just bounced off that. You got to risk 4 or 5%, could easily make 10%. Super nice uptrend, super clear support coming together, great convergence spot. You may see it come back down. The only thing is every time we see a nice big old Nissan candle like this, like boom, it doesn't really seem to come back any time, right? Every time you get a big candle, it takes off. So there's a chance here momentum has to be played into, but ULTA just a bit lower, like 2 or 3% lower here is a absolute steal. But even here, it looks really good in my opinion. Let's check the indicators together. A 10 cross is too far away. Again, I think you could play off it by 1.5%. I mean, I wouldn't wait for it. You can. The 10 crosses are fine. Right, you cross the 10. It looks really good. At least your worst case scenario is usually breaking even. You cross the 10 every single time. Looks pretty good. So you could wait for it. I'd buy it in value. We have value. RSI is low. Stochastic is low. Bulls are low. Bears are high. ULTA could easily see 3% off and be perfect. So right here, 10 cross is fine, but overall 374 is a fair price in this bullish setup. I think the price starts like 525, 560. A lot of folks believe in this company quite a lot. I love what I see. I'd watch this. It looks really, really good for tomorrow and into this week. Next and last is ZTO. Easy short in my opinion. We have consistently gotten to this $32 range, 33 at most dollar range, and just died. We had one time it ran up incredibly and then it died instantly. We can go back and see. It gets up here, it just dies consistently. It's already showing weakness, incredible weakness. So again, if it does spike tomorrow up to like 32, 33, what a treat to get in here for a short. Overall, I can see right here, a fatal gap that wants to be filled. It can come down easily about 6% to fill that, and even more. It's a very clear play. We have the resistance. POC is gravitational in the highest volume node. It wants to tap this again. And this is a great support and a gap that needs to be filled. No volume above 33. This bad boy looks easy for a short. Let's check the indicators together for our last play of the day. When we cross under the 10 EMA line, what happens? It comes down, right? Crosses, it's done for. It crosses under the 10 EMA line, it's done for. Almost every single time. We can get that tomorrow. We're good to go. Overbought It's fair, but overbought here. And again, wildly overbought, then undersold here. So ZTO, when it comes to my cat's getting so scratchies. So ZTO tomorrow, very easy short. Overall, I love what I see. I think it's a very easy play into this week. And there you guys have it. I appreciate y'all sticking around the whole entire time. It means a lot. We'll see you guys tomorrow for another watch list. Again, like, subscribe, comment, check out the discount. Otherwise, have a good rest of your guys' day. We'll see you guys later. Thanks.